Peter Mcguire joining us, CEO of XM Australia. Peter, great to speak with you as always. Just trying to understand whether we're going to see a longer lasting impact of all the geopolitical news in the last 24 hours than we have previously, because markets have been happy to shrug off bad news so far.
Yeah, I think so. I would have thought that you may have seen a little bit of a move in price, but it does certainly seem to be shrugging it off, and we'll have to just see whether something severe or something, if it does materialise, really creates that friction and and that dynamic nature of building in $3 to $5 or $8 as far as a premium from a geopolitical stance. But at the moment, crude energy is certainly bearish and has been sold off over the last probably best part of a week, and we're still waiting to see what OPEC's prepared to do, now pushed out to the 5th of December.
Peter, it's Samina. Good morning. Thanks for joining in. Do you then think the best trade in town is long dollar?
Oh, Samina, I've been, it's the first backward week that we've seen as far as correction over the last 2 months. It's been very, very bullish, and I think possibly some of that hot air blew off it. It's around that 106 level. I'm still a believer in King Dollar. As far as interest rates, you've got better than 50% chance of a rate cut by the Fed, so maybe that is going to take a little bit of steam out of the US dollar. But I think overall, King Dollar trading into New Year's Eve would have to be the trade. And I think that volatility will remain against, the major pairs. Yen, look at that. Have a look at euro and, of course, pound.
Peter, good morning or good afternoon to you. Niraj here. One question, Peter. If indeed the geopolitical situation looks a bit worrisome currently, will it impact the market sentiment? Thus far, there have been spurts, both in crude as well as markets, but they have recovered very quickly. Did you get a chance to look at the recent developments over the last 24 hours? And do they worry you, or are you unfazed?
Well, I'm aware of it, Niraj, and good afternoon. Greetings from Sydney. No, I think that, look, it's hit traders between the eyes, and they're very conscious as far as, the dynamic nature of, geopolitics and all of those concerns. And it is seeming to shrug it off as a term. But I'm waiting to see. I really thought, years gone by, this would have really ratcheted markets up. But at the moment, it's not gaining the traction. But that can change very, very dynamically. I know it's a long weekend into the best part of a long weekend for New York traders. But if something happens in the next 24 hours, I'm sure that will be felt as far as price. And I would think that you'll see, a return as far as volatility. It seems to trade within a range. It gets sold off, and then all of a sudden it booms again to the upside and then gets sold off. So at the moment, it's bearish, and I feel as though it'll hit an inflection point and it'll take another, run up again.
Peter, what would be the take on India right now? I mean, we've seen foreign outflows in yesterday's trade, but then, let's not look at a trend line with just one day. The China preference compared to India as an emerging market seems to have waned. The Trump trade also seems to have waned. But if this escalates, this Russia-Ukraine situation escalates, would India not be the right place to look at for investments as far as foreign investors are concerned?
I would think so, and I'll say this because, first off, it's going to be very hard for any small, medium, or even large enterprise in China to manage a 60% tariff, let alone putting another 10% on it. So I think that's going to be fairly crippling for the Chinese economy, and how they're going to impact that. I think it's going to be very, very tough leading into Q1 and certainly Q2, how that all impacts their trading around about $500 billion a year as far as exports into the US market. And I think it's about 15 or 16% of their global exports go to US. So there's the first thing. So I think you're going to do very, very well India-wise as far as flows. The next part is, where does the Trump trade go? We're still on the high, and I'm pretty sure that will continue at least for the next couple of weeks. I just want to see where we are by Christmas, whether we're going to see a blow-off. But the Russell was up 10% in the last week, so it's been extraordinary, or this month, I should say. And as far as your other point, geopolitics, they're all uncertain points. you know, I've been in it long enough. If something was to escalate and escalate, you know, big time, then I'm sure the market will take it and digest it and probably ramp up price very, very quickly.
Peter, very lastly, we've talked about crude, we've talked about equities. You know, base metals has been giving us very confusing signs and signals. Piecemeal approach from China hasn't helped industrial-wide demand. We saw that in terms of readings that came in from Korea as well this morning, aren't looking too promising in this part of the world. How would you trade base metals? Would you consider long strategies on any of the base metals? And also, does gold become a buy with rising geopolitical stress?
I think first off, gold, yes, it'll come a buy, and certainly silver as well, Samina. Silver's running up 30.88, gold's 26.70. I feel as though that they'll go on another boom to the upside if you get that geopolitical tension. As far as copper and aluminium, copper's languishing. It's back at 9,000, aluminium at 2,600. I thought aluminium may have taken a bit of a run, but a lot of the hot air's come out of that as well on the LME. So where we run, keep an eye on gold, keep an eye on silver. I think I believe that they'll test all-time highs in December. And I think there's a lot of components that are going to drive price higher, and that is what's happening as far as Fed policy, what's happening in the Eurozone, and naturally, geopolitical tensions.
Peter, always great talking to you. You have a good weekend, and we'll see you soon.